Hello, welcome back. Mike from Canavan Wealth. It is Tuesday, May 23rd. Time for Mike Reads the Journal. Let's jump into it. Obviously, the big news is the debt crisis. We're not going to talk about it. I talked about it last week. I'm sure I'll do kind of a recap video on it. Markets are down about 0.25% today, but if you ask the markets whether we're going to come through this debt crisis, answer seems to be not concerned. Up about 1.75 over the last 5 days. And if we look at kind of the trend, we're just barely starting to kind of poke out of this trading zone that we've been talking about. But, so I think the debt crisis coming through that is one of the two hurdles we need to see. The second hurdle, I think, will be the July Fed meeting where we see whether interest rates go up or not. The tentative plan, I think, is no raise, but we'll have to see. All right, let's jump to, this was kind of the top news article for the Wall Street Journal, which means it's a pretty big deal or it's a slow news day. So, this doesn't shock anyone. This is Apple making a big deal with Broadcom, who they already buy a lot of their components that go in their phones and their, in kind of wireless systems. The big deal here is that this is kind of a push towards U.S. production, U.S. manufacturers, U.S. companies. For 2 administrations now, we've been working towards getting this type of production back in the U.S. For those of you that hate the other administration, 90% of Americans remember it's been 2 administrations now we've been working on this. So I think this is a really, really great news for the U.S. for sure, that, kind of high-tech production and whatnot is going to be a little bit more focused here in the U.S. Apple is obviously a major purchaser of all those components. So, all right, this next one is just pretty facepalm worthy. This is an article about real estate syndication, which has become very popular. So it's the idea that it's kind of these real estate companies that go and buy rental properties and things like that, fix them up, start charging more rent, just also with housing prices and everything, the value of real estate has gone up. It's kind of how they make their money. And they use investments from generally kind of smaller time investors to do that. And then, that hit a wall when interest rates started to go up and the housing boom that was the kind of pandemic era has started to slow down. This is in particular about one particular guy here who kind of ran this and how it all kind of fell apart. This is the rise in annual fundraising for these, right? You see these massive spikes in 2018, 2022. This to me just feels like 2008 all over again, right? With greed in the real estate market, at the exact wrong time, which is like, oh, the real estate market's done nothing but go up for the last few years. It must be a great time to buy real estate. Like, it's not how things work, right? What goes up generally comes down, and vice versa. So I think that, I have clients occasionally talk to me about real estate. And I don't think real estate, when you control it and when there, lots of wickets is a bad investment. I own real estate. So I have nothing against investing in real estate, but clients often ask me about this, and I have to tell them, for one, right, it's work, right? So these syndicates were based on the fact that you don't have to do it; you just have to give them the money. But if you're going to own a property or whatnot, it's work. You have to be a landlord. Even if you are going to turn it over to a property manager, there is still work that kind of has to be done with that. And the second thing is just the risk is totally different than the stock market, right? Defaulting on loans and things like that, especially in a room like this, you truly have the fear of your investment going to zero, right? In terms of, like, if you don't own the property and you're just writing a loan or something along those lines, there's a lot of risk in terms of this. I think the age-old saying goes perfectly in the investing world, like everywhere else. If something sounds too good to be true, it probably is, right? And that is so well placed in the investment world, whether it's you're looking at actual investments or whether you're looking at real estate. If you're talking to anyone that is promising you the moon, they are probably not being truthful, right? There's just no easy ride through the investing world, and yet some people think it exists and want to find it. So, All right, and then this last one is really a topic, to be perfectly honest, I know nothing about for various reasons we'll get into, which is retiring overseas. I read a lot of these articles just to see kind of where the trend is, and this kind of goes in waves, but it has always been popular, which is to retire somewhere other than the U.S. because costs are lower there. This article goes through all of the problems with retiring overseas. I personally have no personal opinion about whether people should retire overseas. For the most part, as this article points as one of the problems is our financial system doesn't work well with people retiring overseas, and specifically all the firms I've worked with and all the firms I'm familiar with do not allow financial advisors to work with people that do not live in the US because of all sorts of compliance reasons. So I don't work with any clients that live overseas, but it's fairly popular to go to all sorts of places. The countries that were on this list were surprising because these are not the countries that are often touted as the place to move and live. Canada's no surprise because I think a lot of people from Canada just kind of move down here when they start work, they become a citizen or whatnot, and then they move back home when they retire. Japan surprised me. Mexico doesn't really. The UK, these ones are no cheaper. Certainly not Canada, Japan, UK, or Germany. Those are not cheaper places. Italy is not a cheaper place. Greece is. Australia is not, right? So the places that is on this list, except maybe the Philippines, but I have no familiarity with the Philippines. Most of the times when people talk about why you should retire overseas, it's because the cost of living there is cheaper, right? Like Costa Rica is popular, Portugal. There's a couple of different places where you can, as long as you buy property and then you become a citizen. This is not the list of those places. So those places must be fairly niche even now in terms of the number of people. So if you reading any type of article that X number of people that are moving to whatever country, it's not one of the big places that people are moving to. So I'm not going to go through this article in detail. If you have any interest in retiring overseas, I highly recommend you read this article. Not to convince you not to. Like I said, I couldn't care less whether you retire overseas or in the U.S., but it just goes over some of the common pitfalls that you really have to watch for that can get yourself in a lot of trouble, not only while you're living there, but if you ever want to come back. They specifically talk, which definitely is about Medicare. Even though Medicare doesn't work overseas, you can't really have a gap in your in the time that you have it, or you face these massive penalties. So it's just really good article. That's really it. We don't have the next webinar is not going to be until July. That probably won't come out until the end of June. Otherwise, if you like the video, please like it or consider subscribing to the channel, and I will talk to you soon. Thank you.